Well, the market has started off a little rocky this morning with Tesla being up in the pre-market and then also up in the first few minutes, but now is down. We'll see how that plays out. We'll check it here in about 15 or 20 minutes at the end of the show. Gary Black is saying this morning that Tesla is got good numbers coming out of China, 11,400, the strongest two-week start to a quarter since 2023 in the second quarter. So that would have certainly encouraged Tesla to be up this morning, but who knows? The market is definitely starting to have evidence of going through some kind of transition, with the Dow up very strong this morning and the Magnificent Seven and the Nasdaq down in the early going. Now then, here's the major story that's out everywhere, so we have to comment about it. Elon says that the story about his $45 million a month to the Trump super PAC is fake news. But as usual, he doesn't tell us what the real number is or why it's fake or whether there's a zero number. My guess is that there is a number. I'm guessing it's substantial. I don't think it's too easy eventually to find out what this is all about. But here's my take on the entire Elon involvement. Okay, very short take. It's very straightforward. 3 points, very quick points. Over the last couple of years, Elon has had meetings and conversations with Trump. And during those longer meetings and very serious conversations, he has decided that Trump is the real deal and aligned with him on most issues that general issues that Trump believes in, like freedom of speech, freedom in general, and also issues of the economy which affect the Trump companies. Number two, he believes that he has been dissed by Biden and not afforded the proper seat at the table per his contribution to the American economy and the future kinds of businesses that are going to drive this amazing future that we're entering into, and believes that this has not been appropriate the way he's been treated. Number three, he needs the government to line up with what he's doing at all of his companies, not fight him. And I think he believes that he now has Trump's ear. Sorry, is it too soon? I didn't really plan that. Anyway, he believes that he is aligned with Trump and that Trump will listen to him. And I think that's true. And I'm very hopeful. Of course, I'm a super optimist, but I believe that Trump will listen to him on some of these issues, especially after the election, when you have somebody who doesn't have to ever get elected again. All right, we have this from AJ this morning. He says, look, Democrats are ticked off. He didn't say that, but I don't like to use that other word, that Elon is voting Republican. They should remember that, number one, Biden called Mary Barra the leader in EVs while barely selling any EVs. And of course, Mary Barra has come out yesterday saying that she's not going to meet her 1 million number by 2025. No, shock. I think that there's a very good chance that General Motors is dead as a company, and Ford maybe will make it, but I don't know. It's starting to seem thin. Number two, Biden's administration didn't allow Tesla to attend the EV summit at the White House. Number three, Biden administration nearly pushed through the EV tax credit, excluding all non-unionized EV makers. Do you remember that? Yeah, that's what the White House wanted to do. They wanted the IRA to exclude non-unionized members. Okay, Biden called publicly to look into Elon's activity, kicking off an avalanche of frivolous investigations. Yeah. Anyway, AJ's point, he says, how can the Democrats possibly expect Elon to vote Democratic after all this? All right, Elon Musk says this morning, responding to the Whole Mars blog, he says, look, take away the subsidies. It will only help Tesla. If you watch Larry and I talking last night, Larry believes that they should just take all the subsidies away. Forget it. We don't need them. Also, remove the subsidies from all industries, not just Tesla, but just eliminate all the subsidies. Let the folks play. Let the capitalists fight it out without any kind of help from the government, one way or the other. No government finger on the scale. All right. Then Elon also says this morning, look, both Tesla and xAI are looking to hire networking engineers and technicians. Really, no kidding. All right. So from Emmett Peppers this morning, he says, look, if Rivian is getting close to a $20 billion valuation and is not growing, well, then Tesla, hypothetically, spun out its Cybertruck division. In his humble opinion, that would give Tesla just $100 billion valuation just for the Cybertruck division, considering how fast it's growing. The P&D and profitable likely to be now, that division is going to be profitable way before Rivian, and they're going to sell maybe, I don't know, 10 times more cars than Rivian. Oh, yes, this is Randy Kirk. Please hit the like button, subscribe button, the notify button, and join Patreon. Of course, later this morning, probably going to be Brian White, as usual on Tuesday, as almost usual on Tuesday. And then tonight we got, for sure, we've got Nicholas Gibbs coming to talk about Good News Tuesday. By the way, I'm expecting that to be political, like Larry and I were political last night. This is the big conversation going on right now. It cannot be ignored, whether I want to or not. Listen, I think I'd probably rather talk just economics and Tesla stock all the time. But right now, the politics is a central point of the valuation of Tesla stock. It's a central point of how the fundamentals of Tesla are going to play out over the next 4 years. It is fundamental. It is fundamental in terms of the relationship that Elon Musk has with the government going forward, which has been, as just pointed out by AJ, been rocky and horrible and destructive. Okay, so these things have to be discussed. If it doesn't fit what you want to see on the channel, I'm really sorry, but at least for now, it is going to be an important piece of it. I would like to get back to all just the basic stuff, but it might be a minute. This from the 𝐄𝐤𝐳 letter this morning. How big the Magnificent Seven has become. The Magnificent Seven's market cap is higher than any non-US stock market in the world. So just the 7 companies combined have a greater value than any other stock market in the world. The group is now worth 15.7 trillion, double China's stock market value of 8.7 trillion. It is also worth nearly as much as the German, Canadian, United Kingdom, French, and Indian stock markets combined. Apple, NVIDIA, and Microsoft each are worth more than the German and Canadian markets. So to put this into perspective, the total U.S. stock market is worth 50 trillion, just 3 times more than the Magnificent Seven. So you can't make this stuff up, but that is where we are right now with regard. So anyway, let's go on from there. We've got AJ again. No, this is real EJ and Tony this morning. He says, look, credit applications were down in June from February, while rejection rates rose. The overall higher rejection rate was most notable in auto loans, where nearly 1 in 5 applicants was rejected over the past 12 months. That is the highest in known history. This is from the Wall Street Journal. This is a very interesting article. I'm going to just read it to you. Well, I'll probably read it with my comments. We've been talking about this inverted yield curve for a long time. It is now down. This is Randy still speaking. Okay, it's down to only 24 basis points on the inversion. That's way down from, it was way over 50 at one point, and recently it's been, holding right around 33, but then it's dropped just in the last few days. The inverted yield, this is the story. The inverted yield curve has gotten a lot of attention for sending a false signal so far of a recession since late 2022. But the behavior of another indicator, the Conference Board's leading economic index, reliable for more than 50 years, also sent out repeated warnings that a recession was on the way. What have I been talking about? This Conference Board's leading economic indicators used to be the gold standard of what people looked at in order to predict the economy. After peaking in December 2021, the index began a descent and flashed the potential for a recession by June of 2022. It continued to do so mostly until this March. But over almost these entire 2 years, economic growth picked up and the tight labor market kept chugging along. The index's performance for April and May has shown improvement and is now indicative of economic headwinds, not a recession, even with broader concerns about ticking up unemployment and a weakening economy. So can it be so? Are we out of recession woods, or is the index out of sync with economic realities? The post-pandemic economy has thrown analysts curveballs, and conflicting data has seeped into the Conference Board's index. At the same time, the surge in services activity since the end of the pandemic may not be fully captured in the index because of its composition. Again, this is what I've been saying over and over and over again. I don't know why this hasn't been picked up yet. I'm not trying to say that I'm smarter or better or different than anybody else. I just know that this is what I've been saying for months and months and months, is you cannot take what's happened over the last 2 years and compare it to anything else. And you also can't, this is the bigger story. The bigger story is demographically, the world and the United States has changed dramatically, and nobody's taking this into consideration. Manufacturing and consumer confidence are two components of the leading indicator that took big hits in recent years and have broadly negative impacts, which contributed to what so far has been the index's false recession signal. Again, I'm going to give you the specific here. Manufacturing might be down because people don't buy as much stuff anymore, and they're not going to in the future. They're not going to be buying books anymore. They don't buy magazines. They don't buy flashlights. They don't buy furniture. What the furniture they buy is cheap furniture from IKEA. It's impacting transportation. Transportation is down. It's been a recession for over 2 years. That all transportation only carries goods, and people are not buying goods. Factories fell into a slump because people are not buying goods. When the Federal Reserve began hiking interest rates in early 2022, orders for new goods weakened, but factory managers didn't lay off big numbers of employees, choosing instead to hoard skilled labor. I know, I'm bragging here. I'm sorry. And hoard skilled labor and wait for growth to resume. Holding onto workers lessened the economic blow from the lower factory orders, and now the manufacturing sector could be rebounding. Yeah, well, it's got to rebound at some point. People haven't been buying anything. And so I've never seen a situation like this in the 50 years I've been following the economy to see a boom bust situation where it takes 3 years for durables to come back. Consumer confidence fell when inflation spiked and people had to pay more for groceries, gas, insurance, and rents, eroding their purchasing power for things like durable goods and stuff. But consumers didn't retrench on their splurging, partly because of pent-up savings from the fiscal stimulus and savings during the pandemic lockdown. Now, we've talked about that a lot. Consumer sentiment turned more favorable in 2023. The yield curve, also a component of the Conference Board Index, inverted amid recession fears and the Fed's higher rate. There was a fear from the beginning of 23, all the way through 23 into 24, that we were going to have a recession. I kept saying that we would not have that recession. I was right, okay? Anyway, interest rates for longer-term investments fall below those for shorter-term investments, which hit bank profits and indicated Wall Street investors think bad times may be around the corner. The yield curve remains inverted. Campbell Harvey, a Duke University economics professor who developed the idea of using the yield curve as a recession indicator, said in early July that it's too early to say false signal. A recession might start a bit after the historical lead time, he said. The Conference Board, a nonpartisan business think tank, developed the index in the 60s when manufacturing was king. And it's not that manufacturing is losing, not only is manufacturing down because the U.S. is not competitive in manufacturing, I believe it's also because people aren't buying as much stuff. Anyway, service industries and jobs have grown to be a bigger part of the economy over time, and they were the service industries are supporting the future industries of the world, which are going to be experiential. And they were a clump of the millions of new jobs created in the post-pandemic economy. The service sector has been strong. We don't have an indicator in our index tracking the service sector, said Conference Board senior economist Stephanie Goldgart, adding that this was a this was a very special time, but it's not special in the future. This is where we're going. The pandemic and the recovery upended economic models. The Federal Reserve thought initially that inflation was a flash in the pan. And it was a flash in the pan. If they just should have been in earlier and gone less. While these extraordinary times likely didn't change economic forces over the long term, they may have disrupted how we try to predict where the economy is headed, said Randy Kirk for the last 9 months. MarketWatch has this morning. Sales were unchanged this month. The government said Tuesday they had been forecast to decline 0.4% based on the Wall Street Journal's poll of economists. So we've had flat retail sales. Now that was not because of stuff this month, however. A raft of recent reports suggest the economy has slowed and consumers have cut back on spending. Yet there was no sign of that in the June retail report that there was any intensification. If autos and gas were stripped out, retails actually rose a solid 0.8% last month. Seasonally adjusted figures showed, and the sales in April were actually revised higher. Sales of new vehicles and auto parts and up and down category dropped 2% last month, but that was partially because of that outage, that cyber attack. A nationwide, that says here, right? A nationwide cyber attack on auto dealers by criminals seeking to extort money prevented many sales from being realized and finalized last month. Those purchases will take place in July instead. Gas receipts also sank 3% because of lower oil prices, but that's a good thing. Retail sales were quite robust outside the gas stations and auto dealers. Restaurant sales, for instance, rose 0.3%, while revised figures show they've increased 3 months in a row. Restaurant sales tend to rise when the economy is healthy and Americans feel secure in their jobs. Sales also rose sharply as internet stores for the second month in a row. They're on tap to raise again because Prime Day is today. All right, Reuters has this. The flat reading in we have a flat reading in import prices following a 0.2% drop in May. Economists polled by Reuters had expected import prices, which exclude tariffs, to dip 0.1%, but they are flat. In the 12 months through June, import prices increased 1.6%. That's following a 1.4% year-on-year advance in May. Then we have the builders. The builders are even unhappier than they were last month. Sentiment among builders is at the lowest level since December of 2023. Pessimism over the direction of sales of new homes pushed the National Association of Home Builders Monthly Confidence Index down to 42 points in July. The July figures fell short of economists' expectations on Wall Street. A year ago, this index stood at 56, and now it is 42. Now, I'm going to give you this suggestion one more time, although I'm modifying it just a bit. Everybody bought a house over the last winter, off season. People were buying houses like crazy, both new and used, repurchases of homes. All homes were selling very, very well December, January, February, March. So everybody that needed a home, that really wanted to buy a home, even at 7% interest rates, bought them during that period. So therefore, you're going to have a period where you're going to see the bust, okay? The boom bust. We talked a lot about boom bust on this channel. This might be creating a real buying opportunity for people in the August to December period, which is normally the slow period. It will depend a lot on interest rates. If interest rates drop down into the 6% range, into having a solid 6 handle or even a 5 handle, we could see a pickup in that activity, which could throw a monkey wrench into everything I just said. But it'll be interesting to see what happens in August and September, the end of the normal buying season, whether there is a pickup based on people going, it's almost back to school time. I really need to buy that house. Very interesting times for the housing market. As always, we keep a very close eye on that. All right, this is time to take a look at what's happening with the markets. Okay, let's start with what's happening with the stocks, and we have got Tesla, which was up 4, and now is down 3. It was down more and is trending up again. It is following the Nasdaq around this morning. So this is unusual. Tesla has been going counter or completely didn't care what the markets were doing this morning. Tesla is exactly following the Nasdaq. Nasdaq opened high, went lower, and now is trending up again. The Dow Jones is up 523. Okay, we might begin to start talking about this rotation. We got the Nasdaq down 33. We've got the S&P up 14. And we've got the Magnificent Seven all down except for Amazon. And I mean down big. Well, not down. I mean, Microsoft 5, Meta down 3, NVIDIA down 2. Only Amazon is up. We've got the Cathie Woods all up strongly. Again, everything I just said would suggest that this rotation is actually happening. All right, and let's see. Let's go ahead. Percentages wise, the Dow is up 1.31%. Nasdaq down 0.15. S&P up 0.26. Tesla right now down 1%. All right, let's go ahead and get those bonds. The bond market this morning, we've got the 10-year down 2.4. Powell did speak yesterday, of course, and the Powell trade appears to be helping the 10-year and to go down. So it's down actually at this point 3 basis points to 4.196. That's a good number. We're starting to see maybe heading back down to a 3 handle. We have got the 2-year up this morning, actually 0.6 basis point. Now, what is the difference? We have got the difference here of 20. Okay, 2-year 25. We're up just a little bit, about 25, 26 basis points. So from 23, the inversion has widened just a little bit this morning. The 2-month is actually down also 0.5 basis point at 5.369, well over 110, which is kind of the breaking point in my analysis. Okay, let's go ahead and take a look at the other. The traders, this is the headline right now, traders see the odds of a Fed rate cut in September now at 100%. That's the kind of number that makes me say there is not even a slight chance of a rate cut. Okay, I'm not gonna go that far, but I'm just saying there's a problem when everybody agrees. Okay. Let's go over to oil. We got the oils down $1.24 this morning, starting to look like going into the 70s. We got an 80.66 on Texas Intermediate, Brent at 83.70. We got natural gas up 1.11% this morning at $2.18, but very low in its recent range. We have got gold up 21.80, all-time high, $2,450. Very strong gold this morning. Silver, maybe, I don't think it's quite back to its all-time high, 0.61 up this morning at 31.12. We've got copper down 1.87 at 4.44, right in the middle of its trading range. We have got the dollar steady this morning, Japanese yen up a bit, euro down a bit. The dollar down against the euro a bit, up against the yen. Okay, we have got the Bitcoin basically flat this morning, up 52 at 63,598 after that massive run yesterday. And okay, that tells us everything we need to know about the markets, except for going back and seeing if Tesla is trending any differently. Still sitting here down 277. All right, so yesterday we had Brian White, fantastic video with Brian White yesterday talking about the benefits and the detriments of this entire Trump thing with regard to Tesla. If you missed that, I think you missed something worth listening to. We are not on the same page. For some of it we are. Some of that we're on the same page. Some of it we're not. So it provided a nice little debate. You want to take a look at that? I will put the card up right here. In the meantime, joining Patreon and helping support the channel would be a real plus. And that's all I got for, later on this morning, of course, Brian White again, and then tonight we have got Nicholas Gibbs helping out on good news. And I have a pretty significant feeling Tesla's back in the green before the day is out. But what do I know? That's all, and it's been great talking to you.